My readers know I'm not a Bitcoin proponent. I don't deny that it's made some people a lot of money, but I believe Bitcoin is a massive bubble right now. Yet it's been reported in some circles that I've recently come out in favor of Bitcoin. It's not true. Now, it is true that I've stated my belief in blockchain technology, which is the technology behind Bitcoin and other cryptocurrencies. There's great promise here. And despite what some critics may claim, I'm not some technophobe who doesn't understand the technology underlying cryptos. I know it very well. I've been studying cryptos since before many of their current owners even heard of Bitcoin. I actually worked with the intelligence community to counter ISIS's use of cryptocurrencies to bypass the international money system. And in my opinion, the hype has run far ahead of reality. This is reflected in Bitcoin's meteoric and unsustainable rise. But again, I also believe blockchain technology is for real and has great potential. So just because I'm not a Bitcoin cheerleader doesn't mean I'm opposed to all blockchain-based cryptos. In a few weeks, I'll actually be conducting a debate with leading cryptocurrency expert James Altucher. The topic will be gold versus Bitcoin, and I can't wait to give viewers the whole story. Stay tuned for details. Today, I want to talk a little more about how gold and blockchain technology could lead the world away from the dollar-based system. Despite everything you may hear in the mainstream media, gold is as relevant as ever. Russia and China, for example, have been accumulating thousands of tons of physical gold bullion for the last 10 years. That's not news, of course. What is news is that both countries are starting to make moves toward the end game of a gold-backed currency that completely bypasses the US dollar payments system. These moves are both geopolitical and monetary. In fact, they track the gold-based attack on the US dollar that I devised for the Pentagon in their first ever financial war game in 2009. That financial war game is described in detail in my 2011 book, Currency Wars. It looks like the Russians and Chinese read my book. According to Russian government officials attending a recent monetary conference in Moscow, Russia, China, and their BRICS allies are moving toward their own gold trading system, bypassing London and New York. From there it's a small step toward a new gold-backed digital currency using distributed ledger technology and military-grade encryption. Distributed ledger technology is another term for the blockchain technology I discussed above. But unlike cryptocurrencies like Bitcoin, this digital system is backed by gold. Once that system is up and running, the BRICS can trade and settle oil, commodities, weapons, manufactured goods, and the overall balance of payments without using dollars or Western financial intermediaries at all. And from there, a global loss of confidence in the dollar is not far behind. Do you think Bitcoin will win the most in this scenario? It won't. The big winner in all of this will be gold.
Are you enjoying it so far?
So far, so good, but we'll see how it ends up. It could be the year of living dangerously.
All right, so let's get through some questions here, because you are, without a doubt, got your finger on the pulse in terms of trends and the intersection between markets and other things. And so you're a good guy to talk to about what we may be seeing in the next year or two. Now, one trend, obviously, is artificial intelligence. You've got a boom, with self-driving cars, chatbot apps. What's happening in AI? How big a market is it? Where it's going?
Well, I mean, it's potentially unlimited. This is AI is now where what we call third wave, third generation AI. So the first generation was kind of big data and simple algorithms. A second generation was deep learning, where the machine could teach itself, but its output would become input that would basically expand the capability of the machine. Third wave is now building these fuzzy cognitive networks and getting inputs from other sources, particularly IBM's Watson machine, which is it's not the fastest computer, but it's the fastest computer that can read the volume of plain language that it does in 8 different languages. So now it's like having 1,000 analysts working 24 hours a day, actually maybe 10,000 analysts. You can't replicate that with humans, but you can do it with machines. So now you bring that amount of data in with meaning. the machine learning combined with the original big data and the algorithms, and it's very powerful.
It sounds like a good name for a punk band, Fuzzy Cognitive Network.
Yeah, FCN.
Do you play any instruments?
I don't. My children are talented.
Not even a tambourine?
I probably wouldn't be able to keep a beat, so.
Okay. Let's ask about what this does to the workforce, because obviously if you have self-driving cars, and truck drivers, for example, is a huge workforce in America. Yeah. We're bringing in self-driving trucks. What happens to the workforce?
I think there are structural problems with the workforce that have nothing to do with technology and what we're talking about. They do have to do with education and training, the opioid crisis. There are a lot of structural headwinds. But as far as this technology is concerned, it doesn't displace as many people as a lot of people think. For example, let's say you're a nurse's aide, and there's certain tasks that you do, and you can automate those. It doesn't mean you get rid of the nurse's aide. It just means the nurse's aide has more time for sort of, more personal care, other kinds of observations, etc. So, the computer keeps getting better and the aide keeps getting better. So the quality of the care goes up. It doesn't mean that person doesn't have a job. It just means that they might, pivot a little bit or have different skills that the machine can't match. So I don't see it displacing.
When I look at an Amazon warehouse and it's 10,000 robots, those aren't people, those are robots.
Well, a lot of drivers out there, and there are people in those warehouses, and they're working pretty hard. So you're right about.
Do you think it's overstated?
Yes, you're right about the robotics and the automation. You're absolutely right about that. But it's not displacing as many jobs as you suggest. It's actually making those jobs more productive. However, there are structural problems in the workforce, but I don't think it comes from robots. As I say, it comes from education or lack of education, a lack of opportunity, lack of labor mobility, bad tax policy, and I would not underestimate the impact of the opioid crisis.
So, that's the second time you've mentioned the opioid crisis. What's going on there, Jim? What do you mean the opioid crisis?
Well, I think it's been very well covered, but the point is this addiction is very widespread. So if you're a serious addict, you can't hold a job. If you're a recovering addict, you might not be able to get a job. Or if you're a closet addict, you might be on the job and performing dangerously, and that affects productivity. It also affects, there are all these...
Who's to blame for the opioid crisis?
The big drug companies and the doctors and the pharmacies that all played along with it. Tens of billions of dollars of profits have been made. I mean, just a really simple example. So you get some oral.
So what penalties should be paid? We know. How do you address that? What do you do?
Well, we actually have a pretty good civil tort system in this country. So this is going to play out like the tobacco crisis. These companies are going to. I know friends with some of the big class action lawyers, and they're circling the wagons.
Okay. So you like technology?
Yeah, sure.
You're a big technology fan? You like markets?
I like
markets.
I like markets. I like technology. I like technology in markets. So all of the above. But I'm also wary of some of the downsides.
Well, what about these new Bitcoin futures, Jim? They're Bitcoin futures. Okay?
Yeah.
So Bitcoin has popped over the Wall Street divide. They've got Bitcoin futures. Jamie Dimon has come out, as a fraud. You're taking the same position as Jamie Dimon, which I know you must love that.
Well, I've gone beyond. I say it's a fraud, a Ponzi, and a mania all at the same time.
Okay, but the futures contracts. What is walk us through then if the Wall Street hates Bitcoin. Some of it does.
I think some of it does. Wall Street likes anything that makes money, and Bitcoin futures make money. See, the Bitcoin crowd, when they saw that the Chicago Board Options Exchange and CME were listing Bitcoin futures, they see this validates it, blah, blah, blah. That's not true. They're out to make money.
But is it a self-fulfilling prophecy? In other words, it's its own prophecy. It starts trading Bitcoin futures. People are now paying their employees in Bitcoin. So it's becoming a unit of account. It's becoming a currency in this way. And doesn't it? You're an analytics and data meister. Do you see in your work how this could transform the global markets as we know it?
Well, I was very privileged to meet the man who came up with the phrase self-fulfilling prophecy, Robert K. Merton, probably the greatest sociologist of the 20th century. If there were a Nobel Prize in sociology, which there isn't, he would have won it hands down.
And long-term capital management.
Well,
and you were their chief legal counsel.
That was his son.
You oversaw the liquidation.
I met Robert K. Merton as a professor emeritus at Columbia, but his son, Robert C. Merton, who did win the Nobel Prize, was one of our partners. That's how I met his father. Okay. So he came up with the phrase self-fulfilling prophecy. But the point is, it can be good or bad. A bank run is a self-fulfilling prophecy. Bitcoin prices going up is a self-fulfilling prophecy. Bitcoin prices going to $200 can be a self-fulfilling prophecy. It's basically, crowd behavior, cascades, what's called an icing hypersynchronous event.
But sometimes it becomes the new reality, the new norm. The printing press, for example, was a great little technology at the time, and you're beloved Catholic Church was kind of like wiped out in a lot of ways because of the printing press.
Well, the Catholic Church is stronger than ever, but here's the thing about it. The printing press is the perfect analog because this is where Bitcoin fans, let's call them, really confuse the public. You have to separate the coin and the technology. The printing press is a technology. A printing press can produce a Bible or it can produce pornography. So one's good, one's bad. But they all come off the same printing press.
But you need paper and the press.
So I have
Bitcoin, the blockchain and the validation of the chain through the coin are pari passu. They are interlinked. They are one. It is the Father, Son, and Holy Ghost, if you will, of the movement that is this currency.
No, I would say that Bitcoin is a currency, and I'll agree it's a kind of currency. It depends on the blockchain. Blockchain has a future, Bitcoin does not. By the way, with regard to the Bitcoin future, is a very interesting point. I noticed the other day that the price on Bitcoin futures, Bitcoin futures are cash settles. There's no actual Bitcoin involved. It's just people making bets and you get a cash payoff, okay? So it's like going to the racetrack. But the Bitcoin futures, there was a huge divergence to the Bitcoin price listed on the exchanges. That's rare because there's an arbitrage opportunity there. It's the oldest trade in the book. When that happens, you sell the future, you buy the physical. The fact that that was not converging tells me there's no liquidity in the physical because otherwise, because you couldn't do the trade.
Yeah, it's an inefficient market at this time. It's a new market, and we're certainly seeing some big growth in that market. Let's talk a little geopolitics here. So North Korea, 2018 hot zone. What's going on?
Yeah, hot zone. A very high probability of war. Now, there's we'll probably get past the Olympics. There are some channels being opened up between North Korea and the United States, and that's a good thing. But there are really only there are three outcomes. One is Kim Jong-un gets assassinated. There's regime change. We could probably only do that with the help of the Chinese. Pretty clear the Chinese are not on board. So I give that maybe a 20% probability, but you can't make it zero. So the other two probabilities, one is Kim Jong-un stands down. He verifiably, voluntarily gives up his weapons development programs, invites in inspectors, etc. I give that maybe a 10% chance. He's not going to do it. He might pretend, but he's been lying for 25 years. You know, this has been dumped in Trump's lap, but it's really the fault of Clinton, Bush, and Obama.
How do you rate Tillerson?
I like Tillerson. I think he's doing a good job under difficult circumstances. I know he's kind of, knocks heads with the president a little bit, but I personally rate him very highly. I think he's the right man for the job. I mean, when you're the CEO of Exxon, you are the Secretary of State in some ways. I mean, he goes around, meets heads of state, and considers diplomacy. I think
they have their own intelligence security apparatus,
of course, absolutely.
Parallel to in size to the U.S. government.
And probably better in some ways.
Right. Let's talk about gold. Okay, gold, of course, getting back to, before Bitcoin, people used gold. And but it's still around. Russia's buying a lot of gold, right? So there's huge geopolitics still going on. You were one of the first guys to come out and identify that a country like Russia, by buying lots of gold, is giving themselves some strategic advantages going forward. Sure. Because if we have a collapse in the current monetary system, fiat currency system, and we go back to something equating to a gold standard, Russia and other countries, China, are going to be in good shape. What's the update on that? Well,
Elvira Nabiullina is the head of the central bank of Russia. Is my favorite central banker in the world. I think he's really smart, doing a lot of things right. But what was interesting is that beginning in the middle of 2014 through the beginning of 2017, of course, the price of oil collapsed, went from about $100 a barrel, low of about 25. Now it's, up around a little bit closer to 60, but still a collapse from where it was. Russia's reserves, in round numbers, went from about $500 billion to $300 billion. So that's a 40% decline in the reserves. During that entire time, she kept buying gold. She never sold an ounce of gold. She sold euros, she sold dollars, she sold treasuries, did whatever she had to do, but they kept buying gold. So I was very impressed with that. It's a smart move. The metric I use is that Russia's closing in on 2,000 tons. The U.S. has 8,000 tons approximately. So the U.S. is 4 times bigger, but the U.S. economy is 12 times bigger. So if you look at the gold to GDP ratio, which is how I measure it, Russia is twice as strong as the United States. It's not just Russia. It's also
gold to GDP is high.
Gold to GDP in Russia is double the United States, which is a source of strength. China's not there yet because their economy is much larger, but they're acquiring gold.
Why do they cut the ruble loose and let it trade freely? There was, hand-wringing about, the ruble's dying, it's crashing, but that turned out to be a good move.
Well, they've allowed the ruble to trade pretty freely, but they're doing it with a good central banker. This is in the 90s. This is in Yeltsin when the ruble collapsed. They have much better central bank management today, and as I say, they're in a much stronger gold position. But we talked earlier in one of our interviews about Russia and China and others working on a distributed ledger technology, basically a coin, not Bitcoin, but some token, some digital coin with heavy encryption, et cetera, that they could use to make payments between and among themselves, settle balance of payments, bypass the IMF, bypass the SWIFT.
Well, that coin already exists. It's called Ripple. Okay, Ripple is a coin used in the banks right now to move value all across the world. It's a pre-mined coin. Yeah,
they're likely to develop their own coin, but be that as it may, using distributed ledger technology. But the point is, they're combining the old and the new. Gold is one of the oldest forms of money, if not the oldest form of money. Digital cryptocurrencies are the newest form of money. They'll actually be using both. Gold for source of strength, digital cryptocurrencies for convenience and ease of payment. And then, you know, I warn my colleagues they're always like, use dollar sanctions, use dollar sanctions. So be careful what you wish for. They do work in the short run, but they're going to force people to do the work.
Innovate.
And that's happening.
Okay, I'll put you on the spot quickly. Do you have a number for gold in 2018 where it's headed?
It's headed higher.
Higher?
Sure.
There you heard it from Jim Rickards. Gold's heading higher in 2018. We got to go. Thanks.
Okay, thank you.
Before I talk about Bitcoin, because I know that might trigger him, we're going to talk a little bit about gold. Just to remind everybody, just briefly, that I've gone long gold for 2018. I believe we're going to see a few good up years. It's been very boring for the past 4 years, where it's been trading in a tedious range, especially if you're a Bitcoin investor, which has been parabolic and exciting. So just so you know, I've gone long gold and gold miners, and so far they're doing pretty well.
Oh, that's fantastic news. You know, I think you're going to be up really nicely versus the price of, let's say, copper or some industrial metal or maybe, you know, Christmas trees. In crypto terms, it'll be like you're dead, but you know, in other terms, it'll be exciting.
Well, yes, Bitcoin and cryptocurrencies are exciting, but the other thing that I think is happening is not only will the tax cuts, they will benefit us, but they will not benefit the budget deficit and the national debt. Also, you have the fact that the stock markets go into 2018 at some of the most overvalued numbers in the history of stock markets. So I reckon that obviously markets can remain more irrational than anybody could remain solvent short betting against it. But I think should there be a spectacular bust, I think even with, even though the Fed has raised interest rates a little tiny bit, I think there's little that's going to be available to combat the crash that does come, if it does come in 2018 or 2019. And I think, therefore, it's probably quite wise to hold gold. That's my opinion. That's why
Well, a couple of points there. So I picked up on was the debt you mentioned. Mm-hmm. Debt is rising, and gold tends to track the rise of debt. You know, it hasn't the last few years. It's been stuck in kind of a bearish trend compared to some other stuff. But if it catches up to the debt chart, if you overlay those two, you could easily get to 2,500 on gold, and that would bring it back to kind of a normalized price action versus the amount of debt in the system. I agree with you there. So that's like almost 100% move from here. And of course, silver being its crazy uncle would mean, silver at $50, $60, $70 an ounce. That would be a big bang for the silver buck for sure. I'm not in any doubt about that.
Now, speaking of sort of debt economies overloaded with debt, you had the bubble of Japan from, 1987, 88, when it started to crash?
89.
89.
For those keeping track.
And so it's still, the stock market there is still 25% below that peak in 1989. So, however, it's, it's said, 3 decades, lost decades. They're looking forward to possibly Bitcoin actually finally boosting GDP there. Bitcoin could boost Japan's GDP, Nomura analysts say. Japan's Bitcoin craze could help the country's economic growth, research analysts at Nomura Instinet said. We estimate the wealth effect from unrealized gains on Bitcoin trading by Japanese investors since the start of 2017 and estimate a potential boost to consumer spending of between 23.2 billion yen and 96 billion yen, which is about 206 million to 855 million. I think that's it's something like 0.3 percentage points they would add to GDP. Remember, the Japanese are some of the biggest forex traders in the world.
Well, this is an amazing story because now we're seeing real geopolitical impact of Bitcoin on a G20 country, a G7 country. Japan, actually, the spending power that comes with the rise in Bitcoin and the millions of people who have been buying it in Japan, the multi-billion dollars that they've appreciated in value is causing a genuine effect in their economy. And this is going to be the year of 2018 where Bitcoin and cryptocurrencies have this geopolitical influence. You've got the Central Bank of Ghana, who is allegedly, we're going to get more information on this.
Some rumor on Twitter. It might not be real.
We're going to dig into this. I'm reaching out to my contacts in Ghana to get some people on the show to talk about this, but they're adding to their central bank.
Certainly, for a fact, we know that Bulgaria has $3 billion worth of Bitcoin,
right.
And that's because they have some bad guys there. A lot of the, the online hackers and scam artists, the sort of Nigerian prince scam artists. A lot of it goes through there.
The people of Venezuela have been, using Bitcoin as a savior, as a lifeline, because their currency went into hyperinflationary collapse. So there's 4 countries right there that are in some process of getting more involved on a geopolitical level into Bitcoin. And of course, they're going to be buying that for their central banks, and the sovereign wealth funds will be buying it as well, plus hedge funds. And, you get to 28,000 in 2018 as a reasonable price target pretty quickly.
So, I mean, these could be issues that basically negate my bet on gold, because I'm betting that the stock markets will crash if the economy starts booming, especially in Japan, which has been dead for so long. It could be change my thesis, but right now I feel like it will crash. And here's some data. So going into the first quarter of 2018. Moreover, the fact that the rise in Bitcoin prices was concentrated in 2017 Q4 could result in the wealth effect materializing in 2018 Q1, the first quarter of 2018. And if that is the case, we estimate a potential boost to real GDP growth on an annualized quarter-on-quarter basis of up to about 0.3 percentage points. And on top of that, I want to say the fourth quarter of the U.S. GDP, I think December is going to show a real shocking amount of spending on durable goods and investment by companies, CapEx. I know for a fact that I did that because once the tax cuts came in at the end of December, your write-offs, your deductibles, are way higher for 2017. So if you could jam in as much CapEx in 2017, you're going to be able to write off far more of it than you are in 2018. So I know I bought a lot of equipment, computers and stuff that we need for the Kai's Report and our other productions. So I think we're going to have a surprise and how much further this market rally might be able to go.
Mm-hmm. Oh, well, that's an interesting analysis. To further look at the price of gold action and what it might do in 2018, I've been saying for a while that the Bitcoinization, hyper-Bitcoinization of the global economy will put a dent in the machinery on Wall Street to suppress the price of gold, as we've seen them do for a number of years, and that will free up a path for gold to move higher as well.
Nomura, their analysis shows that the Japanese hold 3.7 million Bitcoin, which would equate to about $28.5 billion at the exchange rate at that day, at that moment that they did this analysis.
Sure. Well, it's sound money, and it's money that is pushing out all the junk money, all the fiat money. The fiat money world is collapsing. The U.S. dollar is in a hyperinflationary collapse against Bitcoin, and fiat money has had its day. They tried it in 1971. They went off the gold standard effectively, and we went into a period that's never been tried before of every single currency in the world referencing each other with no buttress, without any ballast, without any reference commodity to give that any kind of reasonable foundation. And that failed.
So the other trend I see for 2018 is the real Bitcoin companies coming to the market and the exposure of these kind of fake hysteria. A lot of people, there is kind of a dot-com like craze around Bitcoin. People have no understanding. They're just throwing money at all sorts of stuff, at all sorts of junk that they have no idea what it is. One of them is CEO of Soaring Blockchain Stock, sells about $870,000 worth of the shares. The head of a small biotech company turned crypto has made hundreds of thousands of dollars in stock sales already. John O'Rourke, president, CEO, and chairman of Riot Blockchain, disclosed in a filing with the U.S. Securities and Exchange Commission that he sold 30,383 shares at a weighted average price of $28.61. Remember, the stock of this company called Riot Blockchain, it used to be a biotech company. It soared by 600% once they changed their name to Blockchain, and their NASDAQ stock symbol to Riot from like BioP. But the fact is that this company, Riot, lists 3 blockchain investments on its website: a Canadian digital currency exchange called CoinSquare, a cryptocurrency accounting firm called Verity, and TestPay, which is planning to apply blockchain technology to telecom payments. So not very big companies in this space, and the value of his company is at $270 million in December, just because he changed his name to blockchain.
Can we talk about Hooters?
You could talk about Hooters, yeah. That's a company here in the United States, which is, as the name suggests, it's like it was a restaurant chain. It kind of went out of favor because of all this whole #MeToo and women's rights becoming a little bit more prominent. And Hooters was a chain where you go and large-breasted women serve you beer and food.
Yes, that's the concept of Hooters. And one of the companies that owns a lot of Hooters restaurants that's publicly listed introduced a crypto scheme.
They announced they would have their own crypto or take crypto or something.
And the stock skyrocketed based on the on a lot of what happened was the stock kind of went reacted a lot of way men react when they go to Hooters.
Yes. Well, I think those sort of things, it shows that there's a demand for some sort of investment. Part of the problem is that there's the ICO, so a lot of the big names, the sort of cryptographers and engineers and anybody who could devise a real cryptocurrency or a real blockchain, there's no real incentive for them to go to the public markets. They just would rather do an ICO because they don't have to give up equity then, in a way. So I think this is the problem, is that for any ordinary investor who doesn't know the world of crypto and know how to get an Ether wallet and get these tokens, they go to the stock market looking for anything, and all you have to do is change your name to blockchain, and a lot of people can get scammed that way because those are not.
Well, it does harken back to the dot-com era where companies put .com in their name and the valuations went up dramatically. That's true. There seems to be a lot of this plagiarism going on where you just say, oh, I'm a blockchain, oh, I'm crypto, and you have an immediate response in the marketplace. I mean, are we talking a lot about gold? Because in the second half we got Jim Rickards and it's kind of a sympathy chat about gold just to make Jim's calls about gold.
No, I'm talking my book. It's called Talking My Book.
Oh, you're talking your book. So your book, you're a gold person, and silver, I would imagine.
Well, I actually, over the Christmas break, I spoke to I heard of 2 different Bitcoin whales who are going long gold as well.
Oh.
So I think...
really?
Yeah. So I think this is a...
Well, obviously, Rory, the big thing here is that they're starting to play an open game of negotiations with the United States government with regards to how much they're willing to pay for treasuries, the duration that they're willing to hold treasuries, and how much interest rates they're looking to gather and yield from interest from bonds. So for the past 30, 35 years, what you've seen is that China has been a huge holder and accumulator of treasury bonds. That has played into both countries' hands. The United States gets to issue cheap credit into the world. China gets to have the United States as their largest debtor and build a monstrous industrial economy, becoming one of the largest and most successful economies in the world due to the fact that they can own the safe haven of treasury bonds, where they know that if they own it, the U.S. will keep on being a good friend to them in terms of commerce and trade.
Right.
But now, obviously, Donald Trump is not the mainstream president that they wanted. Obviously, a Hillary Clinton in office would be much easier because you know exactly who she works for, who the interest groups behind her are. She brings all of the same ideas that all the presidents between Nixon and today have brought, and that is more globalism and an inflation of the dollar for the benefit of the rich at the expense of the middle class and poor. And now you have somebody who's a Trojan horse, or somebody who's a Pandora box. You don't know what you're getting. In other words,
Right.
no historical views on politics. A business-minded person, and when you have that, you're thinking to yourself, as China, just put yourself in their head, Rory. You're thinking, okay, this is the time to renegotiate everything that we don't like, because we got a new president. He's not the same president as we thought we would get. This is not the same policy. That means that the U.S. voter has changed and is willing to accept changes. Let's start by tackling the big whale in the room, which is the fact that we own about $2 trillion worth of U.S. debt. And obviously, China is not going to stop buying altogether. They're not going to dump it. It's not beneficial to them as well. If
Right.
you owed me $2 trillion, and I expect to get some at least the principal back, then I would not be trying to shake the boat. But in public, I might be trying to scare you. It's the same as a margin call from your banker. Obviously, he doesn't want to do something that is detrimental to the money that you owe him, but he wants to make sure that you're definitely on the right page when it comes to paying it back.
Right.
So, technically, around the world, if you take a look at the U.S. Treasuries, they are breaking out of a 35-year trend line, and it looks to me like they will start heading higher. The Fed funds rate, what the Fed calls and determines, is the synthetic interest rate for the economy. That is not the real interest rate. The 2-year and the 5-year and the 10-year and the 30-year bond, those are the free market forms of interest rates that we get on a safe haven. The 2-year is yielding 1.97 right now, and the reason you want to know this and you want to watch this like a hawk is because this determines many things. And I'll tell you exactly what this means to retirees, people approaching retirement, and just in general people in the US. So the 2-year bond is 197. That's the yield you're going to get. The S&P 500 right now is yielding 1.75. So that means the next correction for the stock market, instead of buying the dip, most pension funds will go and buy a 2-year bond. So even if China stops or takes back what they buy in bonds, there's still a huge demand for treasury bonds because now they yield more than the S&P 500. And let me ask you something, Rory. If you were a fund manager for a pension fund and you want ultra safe returns, and you can go into the stock market, which you know is trading for all-time highs, and get a 1.7% return, or go to the U.S. government, where you know they can print anything they want, basically, and get 1.97, where would you go? It's the same inflation rate. And so most institutions will go for the 2-year bond. The 5-year bond is yielding 2.34. Now you're getting a real difference, like a 0.8 of a difference between the S&P 500 and the 5-year bond. And so what you're looking at right now is how the end to a stock market bull market looks like, where bonds yield more than dividends. So the next correction, you're not going to see people buying back the dip as much as you've seen for the last 8 years. One thing that's important. Second thing that's important is when the synthetic interest rates, so what the Fed determines, which is between the 75 basis point and 1% right now. If you see that increased enough to where it's yielding more than the 2-year bond, that usually signals the end to the stock market bull market, and it means that in about 1 to 2 years later, we're hitting a full-blown recession in the US. Go back in history, check every time the Fed is tightened. That is exactly what happens when the synthetic interest rates go past the bonds, the treasury bonds. And so with 4 interest rates hikings in 2018, if they raise it to 2%, then they're going to be at that situation where their interest rate, their synthetic interest rate, is more than the safe haven bond, and that is huge to bonds. And so if bonds continue to rise, it's going to take more time for the Fed to get there, and we're going to see the stock market rally on and on and on for more than 1 year or 18 months. I know it's hard to believe, but no one thought that it would rally for 8 years. So obviously, that is one of the most determining factors. Wrapping this up with a larger point of view, Roy, the end result of what's going on right now is a move away from the U.S. dollar as a global reserve currency, and a move away from the U.S. as being the veto power over major world events, and a move into a world where there's other superpowers that are determining how things shape in this world. So I think it's a monumental shift, and people need to be prepared. And for your listeners especially, I created a report about the crash, about how to prepare, anticipate, and even profit from what's going on at wealthresearchgroup.com/crash. And you can obviously go there and download, and we will be focusing on this in a major way and watching this like a hawk in the newsletter in the next year for sure.
Yeah, and all of your reports are free, just so people are aware of that, and what you produce is an outstanding research. It's class, no joke. You mentioned inflation a couple of times in there, Lior, and if say the bonds continue to rise, and that buys the Fed more time, what impact on inflation would that have? Would that send inflation higher? Would it send it lower? Have no impact? I mean, the first thing I'd like to say is that I pay more attention to what John Williams over at shadowstats.com has to say about inflation than I pay any attention to what the mainstream media or any of the government statistics say about inflation. I think that I don't believe what the government has to say about inflation. I think that it's much, much higher than what it is. But how would the impact on the bond market continuing to rise, what impact would that have on inflation?
Well, let me ask you, if you're either an institution, a corporation, a small business, or an individual, and your banker calls you and say, hey, the Fed is raising rates. Well, we're going to have to raise rates as well soon. Do you want to, I know you wanted that dream home. Do you want to take out the mortgage now, or in about 6 to 8 or 12 months when the interest rate will be about 1 to 1.5% to 2% higher? And so this is the pressure that raising rates puts on an economy. Counter to what many gold bugs have shouted out over the last 8 years, that easing and accommodating brings inflation, which is not true. It helps deleveraging and deflating the system, because you're creating cheap credit, and all it does is goes into the higher echelons of the economy and doesn't trickle down to Main Street. Because if I get free money, I'm not gonna lend it to you. I'm going to buy a treasury and make an arbitrage. In other words,
Right.
if Bank of America or Citi or any of these banks get money at zero, and they can go back and buy a bond for 1 or 1.5%, they'll do that all day long. And if I'm a corporation, like the CEO of any of the S&P 500 companies, and I can borrow money at 1% and buy back my own shares, raise my profits per share, and get my stock rallying, I would do that instead of hiring, raising wages, etc.
Right.
And so that is a very deleveraging situation when you accommodate. When you raise rates like you do now, you are in a situation where if you mismanage this, inflation can really make a runaway move. Right now, depending on who you read, it's between 1.5%, 7%. I know John at Shadow Stats says that it's about 10% right now. It doesn't matter. You buy anything, you see that prices are rising.
Right.
Not astonishingly, but it's obvious that inflation is more towards 3 to 4% than 1.5%. But it doesn't matter. All that matters is how people feel about inflation, and if they feel that by saving they're losing, then they're going to start spending and borrowing, etc. And this is what's going to start happening. So yeah, in 2018, I do see inflation rates rising. I do see we already see industrial metals rallying, but we will see the hybrid precious metal, industrial metal, silver rising, in my opinion, to over $20, maybe over $22 per ounce by the end of the year. Gold could be around $1,400 by the time this year ends, and this is a positive move for the miners as well, for the junior mining sector, because this confirms a renewed bull market. This confirms that exploration budgets can increase, and takeovers by large caps to small caps can start happening. And this is very bullish for the entire ecosystem. In fact, if you look at the best sort of situation right now for a junior mining speculator, it is to look at the most mining-friendly jurisdiction in America, Nevada, where 4 out of every 5 ounces are produced. And then you look at who is going to make a lot of takeovers in the next few years when the market is cheap, and create a lot of increase in production. And then in 5 years' time, these companies that are making acquisitions today, when other companies are coughing blood and trying to remain afloat, those are mining companies that are now small 100, 200 million market cap companies that can be in the tens of billions by the time the cycle ends. So we're looking at a company, Rory, right now that is called Fiore Gold. It's the same management team as Hive Blockchain Technologies, the company that Wealth Research was among the only 4 newsletters in the world to cover since day one. Company has had the most successful IPO in Canada's history, and now they're looking at Hive is a pure blockchain miner, and Fiore Gold is a pure Nevada aggressive acquisition play. If you want the full research on it, by the way, you go to wealthresearchgroup.com/gold2018, and you can check that out. But that company is producing about 37,000 ounces a year of gold, and they're looking to increase that to 150,000 ounces a year. If you look at companies that are producing that, then you'll see they're trading for about $1 billion market cap, whereas Fiore has about a 100 million market cap. Huge upside potential. Probably the best team in the business when it comes to making acquisitions and building shareholder value. Same people behind Lithium X, which went from 3 million to 265 million in 2 years, and same people as behind Wheaton River that was incepted in 2001, and by 2005 was sold to Goldcorp, which then went on to become the 4th largest producer of gold in the world. So there's huge potential with the right type of companies. I think copper will also be a huge performer this year. Wealth Research Group for 2 years has looked for a copper play, and we finally found one 2 weeks ago. A very tiny company, but Wheaton Precious Metals, which is a huge $10 billion mining company, took a huge position in that company. It surprised the entire market, but since it's a newly listed company, nobody's even heard about it. It's called Cucho Copper, and you can go to wealthresearchgroup.com/inflation for the full report on that company. It's grossly undervalued right now, and I have personally made it a large position in my portfolio, as well as Fiore Gold. So if you're underweight gold companies, like many people are, that is a good place to consider how to start. I mean, for about a year and a half now, most of my gold portfolio has been shorting the ETFs, even the triple ETF for the gold miners, and then on the flip side, dollar cost averaging my best and most and top quality plays for the time then that this market turns around, and that has been profitable because on one side the market sucked. It was very bad. And so shorting it was a good idea. But on the flip side, the top quality companies did not falter with the entire market because they have a very steady shareholder base. And so you were able to dollar cost average there without panicking. So I think that is something that is very good for a cyclical industry like mining.
And speaking of mining, as you know, Lior, I just interviewed Tim Warman, the CEO and director over at Fiore Gold, and the way that he was describing the company and the acquisitions that they have on the table and what they're looking at and how the direction that they're going to grow the company is really awesome. And I compared it to what Keith Neumeyer is doing with First Mining, and that the way that it's really a microcosm. What Tim Warman and Fiore Gold are doing is really a small scale of what Keith Neumeyer and First Mining Finance are doing. Same thing. It's the same business model, and it's really you can't beat it. And I think that what they're gonna the position that they are going to put themselves in over the course of the next year and a half is going to be unbelievable. It really is. That's just what I see anyway.
If you're already talking about it, I'll just mention briefly that I had a conversation with Keith not too long ago, and he's thinking about big things for First Mining Finance. But the major difference between them right now is that Fiore Gold is already producing, and
Yes.
First Mining Finance is an optionality play at this point.
No,
So,
I understand. I was just saying that
Yeah.
what
they're both
their approach,
aggressively accumulating
right,
proven properties in anticipation of what's going to happen. That is very accurate.
The M&A, the mergers and acquisitions that are lining up right now, because the large scale mining companies, they're running out, and they know it. And in order for them to maintain their position, they're going to have to start acquiring all of these companies, all of these mines that are out there. And so people like Tim Warman and Keith Neumeyer and a couple others, not too many, that are putting themselves in these really great positions. Man, they're going to look out. I mean, by 2020, 2021, good Lord, they're going to be, don't even want to say. And speaking of gold, how do you see 2018 playing out for the physical metal? Do you think it's going higher? I mean, you said you were thinking somewhere around 14. How are we going to get there? And you said silver 20 to 22 by year's end. What's gonna?
Well,
What are you seeing that others aren't?
Well, the first thing that's important to understand is that in terms of geopolitical events and in terms of populism, we're reaching a point where the U.S. cannot endure a recession right now socially. The wealth disparity, the wealth gap, the emotions of people under the surface, they're not telling, they want to be politically correct, but under the surface, people are absolutely furious with the fact that the rich are getting richer for 8 years straight while they are not seeing even a little bump in their wage. They have to work 3 or 4 jobs part-time to get the same income as they did in their middle-class job just 15 or 20 years ago.
Right.
And they're not seeing their family. And so behind the surface, I know unemployment rates are very low, Rory, but that's because 100 million people are not working.
Right.
So the participation level is just not there.
Right.
Obviously, with about 70 or 80 million people approaching retirement or in retirement, you will not see a lot of people working. But those retirees, most of them are not sufficiently equipped in terms of savings to stay afloat for 20 or 30 years. And the United States government cannot afford to pay people to live until 100 or 90, which is what people are starting to do now, because the largest population growth is in the centenarians, the people that are over 100. So the bottom line is geopolitical events right now, anything can trigger a huge problem. That's one thing. Populism is the second thing. The end of the deleveraging phase of this cycle is clearly over. Consumer confidence is very high right now. Small business confidence is very high. And, overall, you're already after a 50% correction in the price of gold. It bottomed at 1,052 exactly 2 years and 2 weeks ago. It's not going back down within this cycle, and the cycle has just started for it. It's only up 30%. Have you ever seen a gold cycle that lasts 30%? Obviously, no. Now, when you look at how much of the currency supply it covers, gold only covers about 7% of the currency supply. That's highly low for even the last 46 years of fiat currencies. And so, if you just think that it should be about covering at least 15 to 20%, then you're talking about a gold price that is triple the price it is today. And that's one of the reasons that Ray Dalio, the largest hedge fund manager in the world, has piled in big into GLD ETF in Q2 and Q1 and Q3 of 2017. He's now the 6th largest holder in the world of gold ETFs. Now, his fund returns about 21% a year. So if he buys gold at about $1,250, the price that he paid, 21% from that is about a price of $1,500 for gold. So that's where the smartest person in investments thinks that gold is going. Even if he's wrong and it's headed to 14 or 1450, most of the uneconomical projects in the world right now for gold are very economical at 1450.
Right.
And so you're going to see a large rally in the junior miners after about 7 years of massacre, a bloodbath, nothing short of a bloodbath for these companies. I think gold is headed higher. Just to make something clear, I own gold and I own silver. I own them in about 4 continents inside of vaults. No way am I ever selling my gold. It always remains at about 5% of my overall net worth, and I do not expect to become rich from it. The only thing I care about is if there's a real crisis, I own gold and silver. And if you want to become wealthier or richer, if you want to make money from that, you got to trade it. You can't buy the physical ounces of gold, which is an alternative currency. When you buy dollars or euros, you don't expect to become rich from doing that, and you shouldn't expect to do it with gold and silver. It's not the point. The point is an alternative currency with no counterparty risk outside of the banking system, totally owned by you. You can go anywhere in the world and change it to a fiat currency. Everyone accepts gold and silver, and so that's the point of it. But if you want to trade it for large gains, you got to come in at the worst possible sentiment for gold shares and do that. If you don't want to do that at all, if you don't trust any paper vehicle at all, then what I need to tell you is this. If a given stock is trading for $1 and the dollar zeroes out tomorrow, goes to zero, obviously not going to happen, but just hypothetically, your stock is not zero. It's $0, but it's still going to be priced at another currency. And if there's not another currency, then if all the currencies in the world are wiped out, it's going to be priced with something else. When you own a stock, you own a piece of a business. That business has machinery, people, talent, etc. That is worth money. Whether or not you measure that money in US dollars, euros, yens, or in real estate. So it's just important for people to understand. If they own $100,000 worth of Microsoft and the dollar zeroes out tomorrow, their position is not gone.
Right.
It's just gone in terms of the measuring stick.
Right.
Which is the US dollar.
The value of Microsoft is changed.
Exactly. Exactly. And so the riskiest asset in the world is anything that is just cash dollar or a bond in dollars, because that's people owing you dollars. That is not something that you want to be part of. It's a guaranteed loss.
A guaranteed loss. That's what we want to avoid.
Exactly.
There was somebody that said that.
About that.
There was somebody that said, don't lose money. I think it was Buffett, maybe. I don't know. Somebody said, the number one rule of investing, don't lose money. And this is last question. Cannabis.
Cryptocurrencies.
Sorry. Cannabis. Cryptocurrencies are fine. I would rather stay focused on value, and I think that what's going to add value to people's portfolio in the future. And I'm not a financial advisor. I'm not giving you financial advice at all. But what I see is that change that you were talking about, the geopolitical change, the populist change, the people seeing behind the curtain, if you will. And one of the major themes that kind of was overshadowed in 2017 was cannabis, because cryptocurrencies stole every headline out there. But behind cryptocurrencies, cannabis was growing and growing and growing. And as of July 1st, I believe it is, it's either June 1st or July 1st.
In Canada, it's July, yeah.
Yeah, Canada. The entire nation will be marijuana, cannabis will be decriminalized, and they're not going to be able to supply the demand that it's already projected to be. So I know that you like cannabis a lot as far as as an investment vehicle. Give us what you're seeing in 2018 and beyond.
Well, sure, and if you don't mind, just because cryptocurrencies have been such a controversial topic, let me address them for 1 second.
Okay.
And say this: any comparison between gold and any of the cryptocurrencies is ludicrous and should not be made. None of them are 5,000 years worth of social tradition and social acceptance. None of them are commodities. None of them are hard assets. And what they are, all of them, are incredible speculative vehicles where if this revolution, this renaissance in the way we transfer value and the way we move money around and the way that we can store it electronically, if this revolution persists and has a large acceptance worldwide, then some of these projects that are right now under the radar, and even not under the radar, but accepted in the inside of this community, they will become world famous, and people that are there early on would make a huge fortune. but 95% of them will be zeroed out, just like in the NASDAQ bubble. In other words, all cryptocurrencies and all of these projects that are based on the blockchain are the same way as NASDAQ companies were based on the internet. The underlying technology will obviously be around, but if you want to make a fortune with this, and Wealth Research Group subscribers have done incredibly well with cryptocurrencies. Bitcoin at 400. We covered Bitcoin 400. We covered Ethereum at $12. It's over 1,000. We covered Ripple a month ago at 27 cents. It was over $3 a week ago. We covered Litecoin at $20. It's over $500. We covered Monero at $19. It's over $500, etc. So people have been, sending me snapshots of a cruise that they bought or 3 months of mortgages that they paid, etc. And I'm happy to see this. Delighted to see this from our subscribers, but it's important to understand that the way we view them is the way you view startup companies. So we look at the management team, or what we call the core developers, the core people behind it. If we think that they're talented enough that they solve a real world solution, in other words, a real world problem, then they might be there in 2 or 3 years. But in general, you really need to be very, very, very careful. And therefore, we only speculate with small sums, and we only cover the absolute best projects, and we stay away from the rest of these projects because, just like in the NASDAQ bubble, very well-intended people, but lack of talent and lack of a real competitive advantage for your project, it's going to go away. It's going to be wiped out. So that's where I'm at with this. By the way, if there are people that are interested in cryptocurrency speculation in your audience, we just released our top 5 for 2018, and you can just hit wealthresearchgroup.com/top and the number 5. Moving on to cannabis, I think cannabis has a guaranteed hyper growth stage in front of it, because all of the illicit market is just going to turn into the legal market.
Correct.
That alone will have the wind at their back for